I'm a second generation hotel guy. My dad, I was raised in hotels. My earliest memories are, being 5, 6 years old, chugging along with my dad when he was doing property walks at hotels and looking for broken light bulbs and all that kind of stuff. And so raised in hotels, the whole thing, counting money, putting in little sleeves, dropping it off in the bank, all that kind of stuff. Went to undergrad. Didn't study anything related to finance or anything like that. Did international languages. I speak Mandarin, Chinese, and Tongan, or Mandarin, Chinese, Arabic, Tongan, in addition to English. And then went to law school. Law school was really important for me. I went to Yale Law School. At Yale, I started a tech company called Invone, investor and owner, right, came together. And Invone's idea was that you could fractionalize residential real estate home equity, just like you could do for commercial real estate home equity. So it's kind of the Crowd Street Fundrise realty, but for residential, for homeowners. And so that was kind of my first foray into real estate, really deep real estate finance, and how it all worked. We were venture backed. We grew. We had investors. One of the board members of Goldman Sachs invested in us. We had some other folks that invested in us. We got really big. I ended up leaving that to found Wolfgramm Capital, actually. So I saw an opportunity in 2021-ish, end of 2020, early 2021. COVID's hitting. Hotels are shutting down, or occupancy is dropping in half and or fourth. And so I was thinking, hey, let's think about how we can take advantage of this. So Wolfgramm Capital was formed during the realization that there was a buying opportunity that is once in a generation for hotels, partly because of COVID, partly because of some of the other things that we're seeing with high inflation rates and a lot of cheap debt that was coming out and maturing. So Wolf Capital, we formed it about 2 years ago, looking at what the pipeline would look like, projecting out what we thought hotels were going to be, that they were underpriced at the time, but that they would come back, and that we needed to form it now and buy now, rather than buying it in 5, 6 years and hotels have already all kind of stabilized out. That was how it was originally formed. It was formed by a combination of three of us who founded the company, a mix of legal, hotel operations, and finance. Hotels weren't necessarily being foreclosed on, but there was a ton of uncertainty in the market. I mean, this is back in no vaccine, countries aren't open for travel, flights, one person per row kind of thing, like the whole thing. And so hotels are getting hammered. I was long on hotels and bullish on a long-term outlook of hotels. I think would come back. And so got together with two of my co-founders. One is my father, who's been in hotels operations and all that for his entire career. My dad came from Tonga, which is like near Samoa, Fiji. And another is an attorney that I actually worked for, my uncle. And he had done a lot of the attorney side for the hotel companies. Anyway, and so we got into there and we were like, look, let's think about hotels. Let's think about how we can buy them at attractive bases. And particularly hotels that maybe struggled during COVID, or what happened is 2018, 2019 was a banner year for hotels. So a lot of frankly, unexperienced, especially apartment folks, they did some basic math. They said, look, I'm making $1,000 a month in this apartment room. If I owned a hotel, I'm charging $100 a night. That's 30 nights. I'd make $3,000, $4,000 a night. Hotels are basically apartments with short-term leases. A bunch of people got into hotels 2017, 2018, 2019. Some even got in 2020, cheap debt. Turns out that hotels are some real estate, a lot of business, right? A lot of it is the business side. And if you don't understand the business side of the operations, hiring GMs, trainings, how sales works on the hotels, how to manage your rate, your occupancy, all those kind of things, a lot of people started losing their shirt. And COVID was the water's coming out. People aren't reserving funds to fix things, all this whole kind of stuff. So we ended up coming in. We weren't planning on growing necessarily as fast as we did. We were looking at like one or two hotels off. Turned out our first acquisition was about a $40 million portfolio of hotels, about 500 rooms, mainly in Texas. Bought that, just started growing. People knew about us from different backgrounds that we had and different deals still started flowing in. We bought a bunch of those limited service types of hotels, which is your Fairfield, your Courtyard, your Residence Inn. But our strategy was always to think about it as you have limited service hotels, which provide steady cash flow, high cash and cash return, maybe less appreciation in the long term, though, right? You're not going to get a Residence Inn that's going to go from an $8 million hotel to a $50 million hotel. It's never going to happen in anyone's lifetime, right? So we have the limited service hotels. We like those, and those also are the ones that weathered COVID really well. So even though you know luxury resorts, Ritz Carltons, were going from 70% occupancy to 0% occupancy, limited service hotels are going from 80% occupancy to 40% occupancy or 50% occupancy. And so they were still, even during COVID, a lot of them were still kind of turning along, maybe not turning a profit, but still going along. So we like limited service side. And then we really like also ultra luxury and nothing really in between. So we weren't doing full service, we weren't doing convention center, we weren't doing big urban 400 room hotels. We were doing limited service. And then in August of last year, we bought the Waldorf Astoria in Park City. And that was a huge, huge acquisition for us as a company. I became the youngest Waldorf franchisee owner in the United States. And so that kicked off a whole bunch of later acquisitions. We then bought a couple other luxury hotels. We bought another limited service. And so that's how we've been able to kind of get the company where it's at. There's two types of avatars of hotel owners. And they're radically different. And I think I'm unique in that I fit somewhere in the middle of the two. And that is you have the immigrant family. My father's an immigrant. You have an immigrant family who moves to the U.S., lived at a Motel 6 and managed it, and then eventually bought it on a seller finance from the owner. And now their family owned it and ran it, and all their cousins lived there and they lived there. And that was a lot of how I feel like my upbringing was being in hotels all the time. The first time I ever ate a steak was at my dad's Holiday Inn in Anaheim, California. The first time I ever had one, we got it for free. And so you have those owner operators, and they are typically owners and operators because they grew up, from the time the kid was 8, he was sweeping floors, he was checking guests in, he was refilling the vending machine. And then they go from the Motel 6 to a Sonesta or a Quality Inn. And then, 5 years later, they buy their first Marriott, right? And that's like a big deal, big banner, thing. Buy the first Marriott, they buy the Fairfield, and then they start picking up a little bit of maybe over 25, 30 years, they have, a dozen hotels, right? And that's their life, that's their family's legacy. That's definitely an avatar for hotel owners and probably the most common avatar for hotel owners on the limited service side. Then you get luxury side. The Ritz-Carlton owners, the Hilton owners, the Waldorf, the Luxor, the LXR, the Conrads, all those kind of luxury, JW Marriott. Those are typically the Wall Street guys, right? They're either big funds that own them or big institutions or trusts or all those kind of things. Or it's guys who worked on Wall Street, investment banking. They leave, they go do a fund, and they own those kind of things. That's super, super common. I mean, the dichotomy could not be wider when I go to these hotel conferences. I go to both these hotel conferences, right? I go to hotel conferences that we get invited to because we own the Waldorf, and all I see are a bunch of ex investment bankers, ex Goldman Sachs, ex that kind of thing. And then I go to hotel conferences because we own a Fairfield in a town that's 40,000 people in middle of nowhere, Texas, and we get all those other kind of guys who grew up in hotels. And I think that there's something interesting about bridging that gap. I think something interesting about people talk about companies having boots, which is I think about limited service side, people owner operators, and then you have the suits, right, who are the Wall Street, whatever. I think there's something about putting boots in suits, which is how I kind of see myself as. Where I grew up in this, very lower class, blue collar, all that kind of stuff. Went to Yale Law, understood all the kind of high tech finance, managed a little venture fund, did some other stuff. And so the way we operate is kind of unique in that we have this experience, but we're playing also in the luxury side. So even our luxury side, we can go to a Hilton, even though Waldorf manages Waldorf, right? Hilton manages all their Waldorf. We can go there and meet with the GMs, and I can talk to them about their sales processes, their hiring of the employees, how all those kind of things that sometimes you don't necessarily get from these big fund managers, or these big fund guys who've never really spent significant time thinking about hotels as businesses and kind of just look at it as, something on the map, check it off, or buy it and then forget about it.